presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Tuesday morning in the States. Tuesday night here in Asia. As you can see, it's relatively dark in the office alone this late, but we should have some folks coming in a little bit later. We're going to take a look at the yen first and foremost. And, you know, we have been just preaching, if not anything else, that this particular product, there hasn't been a lot of reasons to take the trade off from the long side once we busted past, well, actually started busting past 119.69, then actually going through the 121 area. This is our daily chart, and the weekly. I know you're probably tired of me hearing talking about the yen, but again, it's really feels now. Is it too high? Is it time to short it? The answer to that's no. It's still no. And there's that 121 area on the weekly. So we talked about using the 240s, and the reason I'm pulling it up is, and as you can look at this regulation of the trade, we got through that 119.68, and then, you know, kaboom, got past the 121 area. Then it was just, I can't say this enough, it was very okay to be long and not okay to be short. And as we look at this thing kind of winding higher, last thing we looked at was, you know, in fact, yesterday, in fact, 124.27, we talked, you know, it's not really time to take the long-term trade-off. Let's just wait until we possibly might get back down below 123.70. Let that thing stop you out on the long-term trade. On the short-term trades, obviously, that might be a little bit too much to digest as far as the swings go, but let's take a look at what's happened today. Case in point, we talked about this religiously. You have a profile appear below price action. That's really bullish. Conversely, if you have it appearing above price action, it's very bearish. Why and what do you do then? And you use these inflection points. Well, again, this is our 240-minute view, but you use these based on your trading plans and appetite for risk to try to pick battles at high probability opportunity areas. And this is another case in point. You got the profile appearing below, you know that's bullish. You had the market come down to that inflection point or in the same neighborhood. That's what you look for on the long side, all right? Now, what do you do with it now? Stingy traders, stops below 124.32. The guys who are letting these 240s regulate out, I think now you can move your stop up, which is the really cool thing about these profiles, up into 123.95, okay? And below their appetite for risk, all things considered when it comes to your risk your risk tolerances. And guys, you know, we don't talk about this a lot. I just kind of go through the usual suspects, use the scanner to pick out some high probability subs. But it's not just as easy as kind of throwing these things around and, hey, we're going to talk about this and that. As from a trading standpoint, you're in there slugging it out actively or not actively. You better have some kind of plan in place. Steve Rhodes really gives a really good specific talk about a lot of that. He's really good to listen to when it comes to boils down into trading plans. We don't talk about it enough, but that trading plan needs to suit you, all right? I mean, the same thing that works for a guy that sits over here that's 23 years old who plays a little cards and does this and that, might get involved with some soccer games during the week, and a little bit different responsibility curve he's on. That trading plan is not going to fit that guy. The same thing is going to fit you. So these, and whatever camp you're in. So those types of situations need to almost be tailor-made a little bit, and you're going to have to, the good news is it's something that can be figured out, and you don't want to pay a lot of tuition fees to kind of figure that out. You want to start out with some good, proper information, good, proper tools, not go in with both feet, and just when you're trying to learn something new or trying to switch gears, you always, need to keep in the back of your mind that could cost some money. You might end up paying some tuition fees. You want those tuition fees to be as small as possible, right? What we do every day is just, I think, give you a pretty good landscape, a pretty good way to, mitigate the minefield of trading. And we always talk about stops, and that's kind of first and foremost. Every prop trader that we ever talk to on our side of the fence, play defense first. Okay, we don't talk about simple things like this all the time, but record this show, listen to it over and over again, and always keep it in mind. All right, let's move on to the Australian dollar. All right, this is another good case in point. We're going to just kind of stay on some primer thoughts here this morning. Here's the Australian dollar. Here's that weekly view we talked about. We talked about this inflection point down here, 75.96. We called it the 76 neighborhood, and we reached a low of 75.98. If that's not close enough, I don't know what is. So, again, we've kind of come in here, retested it this week, as we were very close to it last week, as you can see. I could blow it up, and you could, in fact, I will blow this up. Kind of proud of it. I'm proud and honored to show you this. So there's the E-signal low here, 75.98, rounded off, and the unfair lows are 75.96, rounded off. So pretty close. Here's the here's the telltale sign too for the target-rich environment down there. You got an orange bar appearing on the daily. That means that a new demand area will more than likely be putting itself in place down here. You got some new inflection points. You're going to have a new balance area, and you don't know what's going to happen there exactly yet. Also, you've got this going on. Let's pull up our short-term 240s, just like we were using the yen to regulate the trade up. Take a wild guess what we were doing to regulate the trade down on the Australian dollar. Boom, 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 boom. Resistance, breakdown, boom. A little bit of technical damage here on the 240s, the regulator. And at the same time, you've got the daily orange bar appearing. And what I'm going to show you, forget everything I just said, go into the scanner. Let's pull up our Forex. Let's look at the USD JPY. Green. 60s, we're going to ignore this a little bit shorter time frame to use on a show like this for you to kind of watch and try to make trading decisions for the day. There's no yellow bars appearing. There's no hints of that. But let's go up to the AUD USD. All right, a different situation. In the balanced area on the weekly, got the yellow peel back happening on the daily, which means that we've got an orange bar appearing on our charts. Current bottom of the box is the 78.94 rounded off. But again, let me just pull this up on the landscape view. So there's our current box, and then we've got this hint of a new profile attempting to appear. Now, what does that mean to you? And that's just, let's just do a sort here. I'm just going to be real simple. Boom. Only matching results. We're showing new boxes attempting to appear on our daily. Boom. There's the Australian dollar. It's telling you that's a warning sign. So let's go over to our Taz says, oh, wow, intermediate view. Caution to shorts. Targets may have been met in the interim, and trading range could be developing in the downtrend. New demand areas attempting to appear below. If this condition stays in force, blah, blah, blah. So points some things out to you, gives you some clear indications, tells you the story, and I don't know what else we could give you on this one. So, again, it's something that I rely on. I don't, you watch, what's the kid that played in The Matrix? Neo? What's his real? Keanu Reeves. Is that his name? Anyway, I kind of look at this like they're looking at the Matrix code. I mean, I just kind of look at it. I see some opportunities. You look at this thing long enough, and we put these really killer heat map views in, and we're going to talk today, by the way. Eric's going to come on late in the show. We're going to talk strictly about drug stock opportunities, not some of the healthcare other situations. We're going to talk specifically about drugs, and I'm going to show you, XLV, healthcare, daily, weekly. The way we look at these markets with that matrix type look that, you go in there, you you look at the code and you try to make sense and try to find some opportunities that way, especially when the market's doing one thing, you're trying to find instruments that are showing their hand early, long or short, try to take advantage of those in a relative strength trading game, which I'm a huge fan of. And you look at this XLV, the healthcare situation, the weekly, the daily, this is the highest ranked sector. And we've talked about this over the past couple of months that, put a gun to my head and force me to buy something, I'm going into this. All right. So why? Because our breadth situations, here's the breadth charts that we show with the internals. I'm going to show you that this particular sector, we're going to talk a lot about this with Eric later, this is kind of the matrix I'm really looking at to try to find some opportunities. I mean, Aetna, this is not a drug.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Eddie Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they have just released the second running of their 5-year Market Safe Futures Economy CD. This is a CD that could really deliver, but you only have until June 11th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all of the upside at maturity. And should they lose, no worries. There's zero downside risk here, as you get back 100% of your deposited principal. Don't miss out. The June 11th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back to the show. I apologize for that blip. Sad to say, I had a setting on my computer and it rebooted for some reason. Didn't even notify me. It was weird. So I'll make it up to you. And I'm wondering, do we have Eric on the line with us today?
I am online, if you can hear me.
Yeah. Thanks, Eric. Thanks. Good to hear your voice again.
Good morning.
How are you today?
Good morning. Good.
Good. How's New York up there?
Well, New York's, it was like 50 degrees last night, so it cooled down quite a bit. So, it just, it's crazy weather, John. We're just going to have to get used to this. It's June 1st. It was like 49 out, so.
That's insane.
It's insane. It's just, my son told me, he said, when the ice caps melt, that's warming, but the fact is it's going to freeze because the water is going to get so cold. So I'm going to buy a couple sweaters, I think, this weekend and get ready for a cold summer. I don't know.
The mechanism of that's actually kind of scary. One of the things that they talk about is the influx of fresh water and that surface salt or surface fresh versus undercurrent salt. And what that does is it actually disturbs that natural Gulf Stream, as they call it where I live, flow that really carries the warm air. That's why the British Isles are. If you look at the latitude of how far north that is, you're talking about Hudson Bay way up there in Canada. It's basically the same latitude lines that the Englands and the Irelands of the world are on, and the reason that area doesn't act like northern Canada is because of that current that goes up there, and that natural flow of the the influx of the fresh water may disturb that, and that's what may really that's a huge unknown. Of when and how that might really at some point disturb the natural flow that this earth has been used to for a long time. But, there's some crazy changes that have happened in the last 15,000 years. Like the Ice Age, that's when civilization started kind of going to town here. And now we're at the stage where we've had, civilization ramp up to the point where we're inventing drugs and healthcare solutions that are going to keep us living a long, long time, whether the quality of life is good. There's a lot of things out there that are in the pipeline, and that's one of the things that we're going to talk about today, I hope, is some of the drug sector stocks. And, you and I were, kind of going through some of the usual suspects, and we were looking at the scanner when it came to the healthcare sector, and I was showing it earlier, Eric. I had the XLV up, the healthcare sector, on the weekly and daily on our scanner, and it's just the star component from the long side. So what's on your mind here about the drug stocks today?
Well, I go back to I started off with a firm called A.G. Becker. We underwrote a company called Biogen, okay? Mm-hmm. Biogen was up there, and a guy named Walter Gilbert, who was a Nobel Prize winner up in Cambridge, Mass. So we were part of the underwriting team back in, I think they were founded in 78, and I think we brought them public in 83. Okay. And, they lost $100 million in 84, et cetera, and they went on. Now they're the company, I believe, that's going to be the big cure for Alzheimer's, all right? That's one of the we went up to visit them up in Cambridge, John. It was a building, a white building with about 30 cars. I went in, guys are wearing lab coats, walking around with computers, a lot of computers, some little glass vials here and there, and mostly, maybe 15, 20 people. And I said, what is this? At that time there was Biogen starting, you had Amgen, you had Genentech, and so. And this is 1983. People have had to have patience like saints being involved in biotech. And in the last few years, the patience is paying off. Biotechs are up 350% in the last 5 years. The drug sector is the hottest sector this year, up 22% for the last year. The year to date, they're up 9%. Small healthcare is number one sector again. Obamacare, not to be political, but I must tell you, there's another 12 million people that are insured, and the rate of the older people that don't have insurance has declined by 4.7%. So out of the 30 million not insured, now a third of them are insured. So something must be working with that, but that means that the system is going to be phenomenal in terms of the growth. The next 10 years, the largest growth in the job markets are going to be in healthcare and healthcare support. They're going to be up like 25, 30% job-wise. When you go in the hospital, you go to a doctor, you got 5 people asking you a set of questions, the same questions. I've been involved with this because my wife just had a hip replacement. So, I've never seen anything so clumsy in the way that the system works. So there's tremendous opportunities out there, and there's going to be a lot of jobs. Now, getting down to trading, you've got to be a little bit aware. Trading, you have to get rid of your ego. One of the things I think about the scanner is that it really replaces your ego, because it gives you a shot to look at your repetitive patterns of how you trade, what's been going on. You start to learn how to read the market, and you learn to read it without emotion, without the denial and the rationalization that hits most traders. It's a very tough game, trading, and I appreciate what everyone is doing. I've been involved. It's kind of like sports, You just have to. You have to get rid of your ego. You just have to use something else, and you've come along with the scanner. Now let's take a look at some drug stocks. All right. I'll give you. You have any comments on it so far, John, in terms of some stocks? But the one thing, there's small stocks like SGYP. All right? Synergy. SGYP. Have you got that on the screen?
Yeah, I'm throwing it up there right now. Synergy Pharmaceuticals. It's a relatively inexpensive stock. It's a $4 stock.
$4.
I've got the weekly up. Yeah, I've got the weekly up right now. So what's your take on this? I'm seeing a little bit of resistance. We're here at now about 450. We're going to have to close above there to really start kind of getting on our horse again with this. But what's the fundamental take on this one?
Here's the fundamental take on this is this is a joke. This is a jug for constipation, okay? That's the reason the economy hasn't gotten off its behind, because it's constipated, let's face it. But the market for this drug is 45 million people in terms of digestive tract and gastro problems. And they're coming up in the middle of the next quarter here, or this quarter actually, and they're going to have the results of phase 3. You know, there are the several steps in getting a drug approved, from the beginning of the drug to filing the drug, information about it, then having some people test it, the animals first, then people. Well, they're all the way at the end of phase 3 right now, and if they get this approval, this stock will go back to $10. Paulson hedge fund just bought 2.5 million shares. Now, it's the type of thing you look at and you say, it's a $4 or $5 stock, $4 stock. But from a trader's point of view, I would say put it up, watch it. The next quarter is going to be very interesting.
Something to put on the radar screen from the fundamental side. It might be cheap. You know, if you come to the Philippines, you won't be constipated. That might be cheaper. I'm just kidding. This is something to keep on the radar screen. SGYP from the fundamental side. Everything Eric's saying. I'll tell you what, Eric, I want to pull up something that just like a household name. You had Bristol Myers Squibb on some of the things we were talking about. We obviously had some volatility yesterday. In fact, we had a pretty big pullback in that from 69 to 63.
6-7%. Right.
Yeah, but I mean, stepping back, guys, this is the long-term weekly, and by the way, we bounced back relatively quick after that pullback. I mean, even back up into, and that shows you kind of some of the strength of some of these, drug stocks. I mean, the news comes out, okay? So then you're looking at, this is our daily view, and I'm going to actually give you a real-time price here. Hold on 2 seconds. See if I can give you that. Pre-market's trading 66, so this is relatively close. But I want you to see how these levels work. I mean, we go all the way back up into this 67.42, and then again, that's a target-rich battle point area. No matter what the fundamentals are saying, you still, in my opinion, want to continue to try to pick the battles around some of our technical levels. And, we're down here. What do you do with this thing? Do you short it? Do you try to pick a battle on the long side? We broke some technical things on yesterday's, daily patterns. But the fact of the matter is, on the long term, this stock really doesn't have a lot of technical damage. I mean, I don't know if you're seeing this chart right now, Eric. The fact is, the immunology, they said the American Society of Clinical Oncology had a big meeting here last weekend. And Bristol Myers and Squibb, Bristol Myers Squibb, obviously they're combined. They have, some very big areas that they're working on here, and it all has to do pretty much with cancer. And, they're going to, they're out there curing cancer every day. And people that are involved in this, Sloan Kettering, etc., it's an amazing. I go hang out around there sometimes, and I look at the Rockefeller Institute across the street that John D. Rockefeller founded, because his grandson had a serious, health problem. So he said, I'm going to get a lot of doctors and put them over here in the Rockefeller Institute is the one that came up with antibiotics. They're the ones that founded the DNA strain. They're the ones that founded the drug cure, or what they call the cocktail for AIDS. I mean, This is a building over here on 68th Street. No one knows about it, but they are doing work there that is phenomenal. And it just that what these drugs are doing, they're finally coming into their own, and the growth rate in the job market, the growth rate of the stocks has shown itself. I don't expect. Hello? Do we still have Eric? Maybe cut off. Okay. All right, we lost Eric. We're going to continue here. We're going to pull up the XLV really quick on the chart, and we're going to take a look at this. This is one, again, we were kind of tooting the horn of the XLV a while back, saying, put a gun to my head. I'm going to, take a look at, if I'm going to have to buy a strong sector or strong stocks within a sector, with me not feeling that rosy about the market in general. I mean, look at how this thing has acted, and we've had this on the radar screen for a while, and really hasn't been. This is a long-term weekly chart. Stingy stops below 72.70 at this point. this is kind of born. Everything Eric's saying is really borne out in the price of this XLV right now. So as we look at this, we're going to go into the XLV components here. What we're going to do here, that's okay. We're going to pick Eric back up as soon as we can. What we're going to do here is, there's two ways to look at this. You can go into the XLV and try to find the stocks that are the leaders of the pack, or you can try to find some of the stocks that aren't cooperating. Now, the reason I'm not a huge fan on this sector, trying to find stocks that aren't cooperating, is because you probably got better sectors to start with on the short side. This is a sector that, continues to drag. What is that? What rising tides lift all boats type scenario. So I'm actually looking at this from the other side of the fence, the AETs of the world. And what I want to do with this right off the scanner is just kind of pull up Aetna. Again, this is just been unbelievable here. This has been on our radar screen. I know she's like, oh, thanks for telling me now. But 109.90 just, again, broke stride again on the upside here. There's that 109.90 that we had. And this is a great, great lesson here. Daily and weekly inflection points. We get past the border. The troops were kind of on the border for a while, and boom, and here we go. Now what do? I'll tell you right now, you don't short this. There are zero reasons to look at Aetna and try to short it right now, because if you look at this 240, the regulation of this trade up, I mean, just still, again, we're not going back too far with this, but, things on their highs go higher, and this could continue to happen with this as it has happened, literally. I'm just going to go back in time here. Just, think if you took this attitude back here. So, again, you want to try to find strong stocks to buy and weak stocks and weak sectors to sell. On that note, let's go into the XLE, because the XLE has been showing some cracks in the armor, and that has been really getting below 79. We talked about that. We talked about Custer's last stance with that for a while, with that concept for a while. We're going to go back to the scanner. Excuse me. We're going to go back to our ETF grid. And we're going to look at, what's the worst performing sector as far as profiles go, weekly and daily, and there you go, the XLE. All right, so if I'm going to try to find stocks to short, I'm not going to look at that XLV sector. I'm going to look at the XLE right now and try to find some stocks that have really been uncooperative at all, with oil going up, and with the pullback in oil, you've got some good opportunities here. So we're going to be back in a couple of minutes, guys, and again, apologize for the technical issue we had earlier. We're going to try to finish up the last 5 minutes with some things for the day.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, welcome back to the show. Tell you what, I'm looking at the dollar here, but I'll tell you what, if you want to support on the dollar right now, it's 96.38. Some guys were asking about that. 96.38. Might want to wait patiently to see if that happens. Here was the telltale sign of the dollar. I had that orange bar that was in the scanner. Again, the orange peel back that we look at. Let's go down into crude oil really quick, because we were talking about the XLE, and the XLE was something we were kind of leaning on before. When crude oil was kind of going to hell in a handbasket, back going down to 45, the XLE was kind of hanging in there, making higher lows as the old the crude oil product was making lower lows. So now, oil's kind of showing the relative strength. North trade situation, which is the XLE is not exactly cooperating. So let's go into the XLE. We've got crude oil resistance at around 60.50, which we knew that ahead of time. And what we want to do here is look at the XLE just on our charts really quick. Then we're going to go back into the scanner. And again, Eric had dropped off, guys. I apologize for that. I thought we were getting on a roll there with the drug stocks. Then we had another technical problem this morning. Here's the XLE. So again, people are asking, when do I get back in the water on the XLE? Well, you get out of the water on the weekly unfair lows, 79.11. We're trading below there, 78.19 pre-market. So you want to kind of wait until we get back across that border to look at the long side. And 78.97 combined with 79.11. Why are we talking about that DMZ? Because the daily unfair lows coupled with those weekly unfair lows, you need to get back above there to get on the long side. Now, crude oil may have reached some resistance. It's kind of just mulling around a little bit there in a range right now. But right now the XLE, we've got that DMZ we've got to get through to get going north again on the long trade. So right now, again, we've got some technical damage on it. Does it look super scary here on the short side to just kind of start pressing the gas pedal? I think you've got some opportunities here, especially if crude oil pulls back a little bit. The XLE has kind of showed that relative strength south trade, and my goodness, when you look at the XLE, you see just a sea of red here on the scanner. That means that most of the stocks are trading below profiles on quite a few time frames. So if you want to try to find, this is the eternal short. I mean, this is just an ugly situation. This Murphy oil, we've been talking about this forever. Go down into our Taz Says button. I look at our landscape view. Where it's just not a pretty situation. So we're going to take a look at Murphy oil. Actually, you know what? We're not going to take a look at it. It's the same situation. It's ugly, and we're going to look at something a little different here. We're going to look at RRC, Ranger Resources Corp. Let's just pull that up. RRC. There we go. And again, just been in a pretty good downtrend. You got this 56.84. You got to get back above to get alongside with this. You're kind of sitting on the sidelines. And do you short it? I think you put stops above that area on the weekly unfair highs 56.84 and just kind of let this thing, maybe come apart a little bit even farther south on RRC. Here's a couple of other names. Where are we at here? Marathon, MRO, another ugly situation. And guys, we are at the end of our show here. It went so quick today with all the technical problems, but here's the situation on the daily and the weekly. MRO, Marathon oil. It's on my radar screen from the short side now. Stay tuned. Larry Pesavento is next. If you've never listened to him before, you ought to. We'll be back again tomorrow.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.